You are listening to Seven Horns AI, your AI-powered market update. Good evening, and welcome to our Friday, June 26th, 2026 market wrap-up. The trading week has come to a close, and what a dramatic day it was on Wall Street. On the surface, today's final numbers look deceptively calm. The S&P 500 edged down 0.27% to close at 7,338. The Dow Jones Industrial Average was essentially flat, losing just 0.09% to finish at 51,876, while the Nasdaq Composite fell 0.24% to 25,298. But those numbers hide a massive intraday reversal. At the opening bell, selling was heavy, with the S&P 500 down 0.75%, and the Nasdaq sinking 1.25% as chip and artificial intelligence infrastructure names came under fire. However, a powerful midday recovery took hold as investors rotated money out of semiconductors and into software and defensive sectors, lifting the market back to near flat by the closing bell. Looking ahead at the after-hours action, S&P 500 futures are essentially flat, down just 0.02%. Dow futures are down a modest 0.16%. However, Nasdaq 100 futures are down a more meaningful 0.96%, indicating that the tech sector pressure has not fully cleared. The story of the day was a stark division within megacaps. Microsoft led the charge with an extraordinary gain of 5.71%, while Apple rallied 3.14%. On the flip side, artificial intelligence hardware took a hit, with Nvidia dropping 1.64%. Beyond the megacaps, the enterprise software sector exploded. Service now gained 9.85%, and Snowflake surged 9.65%. But the day's biggest disaster was ON Semiconductor, which plummeted 23.66% after announcing a $7 billion all-stock acquisition of Synaptics, sparking severe dilution concerns. Bloom Energy also tumbled 18.49% amid profit-taking and competitive data center power news. Turning to international markets, Asian exchanges had a very rough session on Friday, with Japan's Nikkei 225 plunging 4.5% and Hong Kong's Hang Seng Index falling 1.76%. With Wall Street managing a major intraday recovery today, it could provide a stabilizing handoff for Tokyo as it prepares to open shortly. However, with Nasdaq futures remaining under pressure after the bell, tech traders in Asia should prepare for continued volatility. On the macro front, investors are adjusting to a less predictable environment. Federal Reserve Chairman Kevin Warsh is shifting away from traditional forward guidance, which is expected to drive more volatility into bond yields and equities. Meanwhile, inflation remains sticky, with May PCE inflation coming in at 4.1%, well above the Fed's target. Looking ahead, all eyes will be on Nike's earnings report on June 30th as a key gauge of consumer health. That's your market wrap for today. This has been a Seven Horns AI production. For more insights, visit us at sevenhorns.ai. We'll be back tomorrow. Be back.